Harvey, I reported a bit on this yesterday, this idea that, he filed this as a 13G, a passive stake, but it really wasn't. He was in conversations with the company, with the board, about sitting on the board, and he benefited, perhaps even just from being able to buy the stake at a lesser price than he otherwise would have, with what would have been more rigorous standards in terms of letting people know about it. What are your thoughts here, and what will the SEC, if anything, be in a position to do about it?
Well, I think the disclosures and the forms that Mr. Musk filled out were deficient as a matter of law. He was interested in a board seat. He was interested in changing the direction of Twitter. He's made a lot of comments to that effect. And so his initial filing, which was just that of a passive investor, was an erroneous filing. He conceded that by filing the correct filing, but he filed it very late. Now, in the usual set of circumstances, these disclosure issues are not, shall we say, earth-shattering events. But when you're dealing with Elon Musk, everything is an earth-shattering event because he's gone out of his way to attack the SEC and to effectively bait them into coming after him, which he's done quite successfully. So in this case, it seems clear he violated the law. He seems to have acknowledged that he violated the law. And it's very possible that the SEC will go after him for that.
You think so? You think they will? I mean, and again, to your point, it is now a D, which it always should have been a 13D. And therefore, we should have learned about it on the 24th of March, when 10 days after he crossed 5%. But what can the SEC really do here? And do you think they're setting up once again to potentially battle him, given, as you say, he seems to sort of almost want to bait them?
This isn't, in the scheme of things, these types of disclosure violations aren't the most earth-shattering. And therefore, it's not clear what they would do other than go after him. But they're also looking at him and his brother for potential insider trading. They are dealing with his request to the courts to lift the agreement he made with the SEC, which is kind of bizarre. He agreed to this, and now he doesn't want to be bound by it. If he didn't want to be bound by it, he should have litigated, or he should have refused to accept the consent decree. But he ultimately settled, and now he doesn't want to live up to his contractual undertakings.
Yeah, I mean, it sort of speaks to the dynamic between Elon Musk and regulators at the SEC in general, to your point. I do want to shift gears a little bit, Harvey. I want to get your take on this report that the SEC is now investigating how Amazon disclosed business practices, including the company's use of third-party sellers' data, and what that means in terms of a regulatory probe there, given the fact that there is so much broader scrutiny, regulatory scrutiny of the company in general right now.
Well, I think we're seeing a very different attitude on the part of government and legislators toward big tech. And Amazon is right up there as the biggest of the big tech. What Amazon has done here is bizarre. They conducted an internal investigation, but they won't release the results of that investigation. That makes absolutely no sense. Either they didn't violate the law, in which case they ought to indicate that, or if they stubbed their toes and they did some things wrong, they should acknowledge that and say, here are the things we're going to do to avoid having this arise in the future, and to make remediate for any injuries we may have caused. But trying to stonewall this is, in my view, absolutely the worst posture that a public company and one in big tech can take, especially at this point in time.
Harvey, always appreciate you taking some time and sharing your insights. Thank you.